started with the show and let's get our guests on board. We have Kunal Bothra who's joining us on the technicals, and we have Gaurang Shah who's joining us on the fundamentals. Hi, good afternoon to the both of you. Thank you so much for joining us today. Well, let's get started with all the queries then. Now, first up, let me ask you the first question. Now, this is Satya, who's he's writing. He says that he's interested to end, for these he has given us 3 stocks, and this is for the period of 12 to 18 months minimum period, and he wants to know the entry levels for Godrej Industries and BDL, and he also needs to know for how long can he park these funds. I'll come to you, Gaurang.
Thank you so much for having me on the show, and morning to all of you all. So, on Godrej Industries, then I believe you mentioned BDL, that is Bharat Dynamics Limited, if I heard that right. Well, we don't have a standalone coverage on both of them, hence I won't be in a position to give a buy and hold. But I think FMCG, Godrej, again, a flagship company, if you will. And consumption is likely to pick up as we go into the new financial year. BDL on the other side, government-owned company, Defense, Bharat Dynamics Limited, very strong order book and equal capability and capacity in terms of execution. So the outlook for the sector, both defense and FMCG, looks quite strong, and both of them are established players in their respective sector.
All right, morning to you, Gaurang. Morning, Kunal, as well. Good morning to all of our viewers. Remember, this is a show where we get to ask for all of your stock-related queries. You can connect to us on the WhatsApp number that's flashing on your screen. Do remember, each time you write to us, mention your name, the stock that you're looking to invest in, mention that name as well, along with the buy price, the quantity, and the time horizon. In case you've already purchased the stock and it's a part of your portfolio, we will actually take it to our experts. Kunal Bothra, as always, joining us on the technicals, and today we have Gaurang Shah, who has joined us on fundamentals. Once again, good morning to both of you, gentlemen. And Kunal, let me come to you and let me take this next query. This one is coming in from Satyaveni, and Satyaveni is writing to us from Hyderabad. Wants to know about BEL, which is Bharat Electronics, 2,050 odd shares at a price of 319 rupees per share, and PFC about 600 shares at a price of 551. Wants to know whether to hold on to it, exit, or look to go ahead and average the counters at this price.
No, I think we should hold on to both of these names. I think both of these stocks, they are coming back into their own groove as such. BEL specifically, I think that stock has come back from a very deep and a sharp corrective phase, and I also see that there are traces of relative strength emerging with respect to many of its other peers like HL, etc. Same is the case with Power Finance, the stock forming a decent base for itself at the sub 400 mark. So I think both of these charts are looking attractive. Yes, these stocks, they can probably go through their short-term corrections if the markets remain volatile, but I believe largely that the trajectory for these stocks should be on the upside. So if it's a matter of riding this volatile nature of the trend for these stocks. Once that is behind, I expect these stocks to come back into a very strong trending mode. So I think in that sense, I would suggest a hold.
All right, a hold on Bharat Electronics. Gaurang, I'll come to you now. This is Venkatrao, who's writing from Visakhapatnam. He says that he's a senior citizen and a long-term investor. He's purchased SJVN of 1,500 shares at a price of 149 rupees, and Canara Bank he has 3,000 odd shares. He has purchased it at 119 rupees. Now, of course, he's running into losses. Now, he wants to know whether he should be averaging in, or he wants a guidance on whether he should be averaging in or holding on to it right now.
Well, so firstly on Canara Bank, as a disclosure, we have coverage on the fundamental side from a long-term point of view. We have a buy recommendation. He got in at 115 plus kind of levels. Currently, the stock is trading at sub 85. If it is not going to translate into a larger exposure in terms of his entire portfolio, I would recommend to average also. The earnings have been pretty good in terms of PSU banks. And our understanding at Geojit is that banking and financials is likely to be in the spotlight for all the good reasons. And he can continue to, of course, stay invested. And if he wants to average, he can average at current levels, not in a large way, but in a step by step, part by part, he can definitely average. On SJVN, well, we like the power sector. Unfortunately, don't have coverage on SJVN, so won't be able to give a specific comment on SJVN, but in power generation, we like Tata Power, NTPC, JSW Energy, Torrent Power, to name a few.
That's the take coming in on some of those counters. Let me take this next one. This one is coming from Venkatesh, writing to us from Indonesia. Kunal, he wants your recommendation whether he can accumulate certain stocks, or which stocks can he accumulate in this sort of a dip. At least 3 stocks, if you could suggest that he can look to accumulate right now.
It's a tough one. So I'll go with the stocks which are something which have been on my radar over the last few days. NTPC is something which I believe closer to this 320, 330 range, I think could be an interesting pick, because I strongly believe that the energy space or the Nifty Energy Index has come back into a very strong resilient mode, and there could be a very strong case that these stocks would probably have found a short to medium term bottom also for themselves. So NTPC is one of them. It also is one of the low beta and the high dividend paying companies. So I think that aspect that should fit in your portfolio pretty well. Reliance Industries is the other stock which I strongly believe that has come back into a very strong risk reward mode. From 1500 plus levels towards a point when the stock I think recently was sub 1200 mark. I think the risk reward is extremely attractive. So maybe not at current levels, but just look to buy this on any marginal correction. Say closer to 1200 mark would be a good zone to enter Reliance Industries. And from the banking names, I would still look at Axis Bank as one of the stronger candidates of potentially emerging as a strong outperformer going forward, looking at the way the recent charts are structured. So stick to large cap names as of now, because the markets are still into a rebuilding process after a very sharp correction over the last 5-6 months. And I think that aspect, finding relative strength stocks and the ones which are could be potential turnarounds, I think is where I would look to trade into. So these are the 3 names which I would recommend.
All right, Kunal, I'll come to you now, Gaurang. This is Arunacham Balaji is writing from Tamil Nadu. He says that he wants your view on Indian Overseas Bank. He has 3,000 shares of IOB and he purchased it at 50 rupees. Now, of course, he's sitting at a loss and he wants to know whether he should hold it for the long term or he should sell it at this price.
So, amongst the PSU banks, like I mentioned about Canara Bank, we have coverage on State Bank of India, Bank of Baroda, Bank of India, PNB, Indian Bank, and of course Canara Bank, like we discussed earlier. On IOB, well, I believe, again, no specific comment since we don't have coverage, but it is one of the weaker banks, if you will, in terms of long-term investment idea. Our sense is that these 5 names that I mentioned, especially given the correction, Canara Bank looks quite attractive. State Bank of India has corrected, and so has BOB and Indian Bank. So we would rather prefer larger PSU banks compared to IOB.
On that note, welcome back. You're watching Buy Now, Sell Now on ET Now, show where we get you answers for all of your stock-related queries. Remember, viewers, you can connect to us on the number that's flashing on your screen. We will answer all of your stock-related queries. We have Kunal Bothra and Gaurang Shah to do exactly that for you today. We have Gaurang on the fundamentals, while on the technicals, we have Kunal who is going to answer all of your stock-related queries. Let me take the next query then that we have, and this query is coming in from our viewer this one is coming from Srinivasan, writing to us from Bangalore. He wants to know about DCB Bank. He has about 200 shares at a price of 107 rupees per share for the last 2 years. Kunal, he wants to know whether he should stay put with this or look to shift. He's saying he can actually wait for about 6 months to 1 year.
See, I would suggest a switch from DCB Bank. Now, there are many options you can record for. It depends on the style of the overall construct of your portfolio, the style of investing which you're looking out for. For example, I think Federal Bank is a very good offset, a replacement to DCB Bank. It's a more stable stock, relatively low beta. I'm not sure whether I can say very less beta, but relatively low beta with respect to many of the other private sector banking names. And the fact that the stock has come back towards a good risk reward point at 170, 180 mark, where it's trading right now. So that's a good replacement which you can look out for. If you're looking out for some bit of moderate risk, then I would believe Axis Bank could be a good large cap turnaround from current levels of 1000 plus where it's trading right now. And if you're looking at formidable say large cap private banking names, then I would suggest maybe shifting back towards either Kotak Bank or HDFC Bank. So depends on your overall portfolio construct. If you, for example, already have those large cap private sector banking names as part of your construct, then you can look at the mid cap names like Federal Bank.
All right, moving on then from that, Kunal, I'll come to you, Gaurang. This is Padma Siva Rao, who's writing from Bangalore. He wants to know about the future for Tata Steel. Now, he's bought Tata Steel at 120 rupees per share. He wants to know the view on Tata Steel. In fact, just today, Jefferies came out with a note on Indian metals and how constructive they are turning because of the optimism on China's demand pickup and, of course, safeguarding of India's duty on steel. But what's your view on Tata Steel and the metal pack?
Well, so we are positive on the entire metal pack, especially Tata Steel's. Prudent to give a disclosure. We have a fundamental coverage on Tata Steel from long-term point of view. Stimulus in China gave tailwind positive for the metal sector, and of course, from the US side, we've heard about 25% tariff on steel and aluminium, certain products. Domestic demand, we are optimistic about uptick, and there is a possibility of price revision upwards for flat and long products. Investment, I think you mentioned about 120 rupees or so he's got invested. I think it's a very comfortable zone in terms of long-term investment idea. And only thing is that, compared to other sectors, when you invest in metals, you need to have a little bit of longish time horizon, but stay invested.
All right, that's the take coming in on Tata Steel then. This one is coming from Balkrishna, wants to know about IREDA. He's bought about the stock at a price of 192 rupees per share. Gaurang, he wants a long-term view on this one. What's the take?
Well, Sherry, so, we had covered IREDA during the IPO. This was quite some time back, and we had given a subscribe recommendation from a long-term point of view. And one of these companies basically providing finance to clean and green energy facilities that are likely to come up. Strong order book. Management is quite positive in terms of order execution also. And if I had to make that IPO note as a base of my recommendation, then from long-term point of view, I would definitely say stay invested.
All right, moving on then from IREDA to, another question. It's for you, Gaurang. This is Murli, is writing from Bangalore. Wants to know which transformer stock can he buy with a view of 15 odd months?
Well, so again, with this power generation, power transmission, distribution, and power equipment manufacturing companies are likely to do well. One of the companies that we have coverage, it's a small to mid-cap capital goods engineering company, which is active into, 4 different business verticals, that is KC International. We've been covering this particular stock for a pretty long period of time. Other than that, of course, it's not a recommendation, but transformers and rectifiers is also a company which has done well in terms of last 1.5, 2 year kind of performance. No specific recommendation on transformers and rectifiers, but yes, KC International would be a suitable candidate.
All right, this one is coming in from our viewer. He's not mentioned his name. Okay, it's Ravi. He's writing to us from Bangalore. He has 20 shares of Trent at a price of around 7,180 rupees per share. He is down about 32% on the stock price. Kunal, should he average or just hold on to it?
I would not suggest to average. And how much quantity did you say?
He's 20 shares at a price of 7,180. Actually, I just saw the stock price and I'm also amazed at the fact that I think last time when we were talking, Kunal, the stock was hovering around that 7,000 mark. Now from there on, it's sub 5,000 now. Yeah,
it's sub 5,000. In fact, very recently the stock was almost at 4,000, 500, 700 kind of levels. My sense is that the stock is still not completed the correction or the corrective stage on the short to medium term charts. In fact, I was actually looking at the Elliott wave analysis for trend sometime back, and it looks like that the stock is still going through a third phase of or likely to go into a third phase of a correction. So I would not suggest to average out at current levels. Since you bought at higher levels and your quantity is low, I would have actually recommended to maybe buy a put option just to hedge your position, because you've bought very less quantity. Buying puts may not be a good strategy as a pure hedge. But I would look at averaging out at much lower levels. Say in case if the stock happens to correct to say 4,000 or sub 4,000 levels, that could be a point where you may consider averaging out, but not at current levels.
All right, this is Alex writing in, and this is exclusively for Kunal ji, as he says. This is on CG Power. He holds 200 shares of CG Power and at an average price of 725 rupees. And he says, of course, he's incurred a sizable loss. Wants to know whether he should be averaging in for the long term or should he just exit now?
Thank you so much for that, first of all. But for CG Power, I actually believe that it's a good time where you should look to pair your your positions over here. I understand that the stock has done exceptionally well over the last 4-5 years, 5-6 years particularly. From being a point when the stock was at single digit, 2 digits, towards a point when the stock went up to 800 plus kind of a mark. Now, when you see such kind of a 10x, kind of a returns into stock price, 10x, in fact 100x in this case for stock like CG Power, it's bound to be that these stocks go into a multi-year time-wise consolidation. The stock, luckily, I think on the short-term chart seems to have formed a base at the 520, 530 mark. I would sense that there should be a further rally towards closer to 650, 675 kind of a levels for CG Power. I would consider that that could be a zone where you may look to pare down your holdings for the stock price, and look to buy these stocks only in phases when there is at least a 30 to 40% correction from their previous swing highs. Only then the risk reward would start to look attractive if you are looking at this as a long-term play.
All right, so that's a take coming in on CG Power, but let's
You through all the queries that you're sending in and getting them answered by our experts, and you can send in your stock queries at the number that's flashing on the top of your screen. Well, let's get started with all the queries yet again. Then, Kunal, this one's for you. This is Ravi who's writing from Hyderabad. He has Alchem Labs, he bought it at a price of 4,890 rupees, and he has Polycab that he bought at 5,200 rupees. Now he wants to know whether he should hold or he should start booking his losses. It's a short-term investor. He wants to know the short-term view on these counters.
Well, I think we should hold on to both of these names, Polycab as well as Alchem. Now, Polycab could be a bit more volatile because of the news flow surrounding the stock. We all know what triggered the kind of correction, almost like the last week or the week prior to that. So that could probably keep the stock a bit more under check over the very near term. But I strongly believe that Polycab over the last I think 3 years or 4 years have gone through such kind of a sharp phase of correction, but that's actually emerged out to be a very strong opportunity for longer term traders. Now, since you are a short term time frame view, I would still believe that the stock could have a very strong probability of coming back to that 5,500 kind of a zone over the very near term. So that could be a good zone where you may look to exit. Alchem Labs, on the other hand, I think is a more stable chart. The stock has done reasonably well. The good part about the stock so far is that it's almost like a 10 to 12% divergence from below its longer term moving averages. So that makes a stock a bit more steep in terms of risk reward, and that's why I would believe that there should be a mean reversion phase for Alchem Labs, would suggest a hold on both of these names.
All right, this next one is coming from Sashi Kumar, writing to us from Bangalore. Wants to know more Godfrey Phillips actually. I'm not sure, Gaurang, if you have any coverage on this one. 15 shares at a price of 7,217 rupees per share. What should our viewer do?
Well, Cheryl, we don't have coverage, so I won't be in a position to comment.
Right. Kunal, your view on this one? On the technicals, Godfrey Phillips, 7,217 is the buy price. The stock is actually down from those elevated levels. Also, given the fact that there's been a lot of news flow also that has impacted the stock price.
Yeah, too much of news flow, extremely high degree of volatility. I remember, I think in 2024, there was a phase when the stock moved up from sub 4,000 levels towards, I think, 8,000, 8,500 in a matter of, I think, 4-5 weeks. And post that, the stock took almost, like 3-4 months to correct and come back to that 4,000 levels. So it's a very high beta or high volatile stock. My suggestion is that not to average the stock at current levels because it's still going through a very short term corrective phase. The volumes have dipped down to Godfrey Phillips in the last 2-3 weeks of this price correction. Maybe I think there could be a case where the stock may correct to that sub 4,000 4,700 800 kind of a zone. That could be a point where you may consider averaging out. But then, I would suggest that keep it, very short-term oriented. The moment you get it closer to your average cost price, say from that, after that averaging out at sub 4,800 mark, that could be a point where you may consider exiting the stock. Switch to maybe ITC, that could be a much better name.
All right, switch to ITC is a much better name. But Gaurang, I'll come to you then. This is Dilip who's writing from Odisha. He's bought 300 shares of Yes Bank at an average price of 24.5 rupees per share. Now, he's obviously running into losses. He wants to know whether he should wait for a year average or should he opt out? I mean, Yes Bank hasn't really done anything in the last 1 year. But what's your take on this, Gaurang? Should he add in or should he exit now?
Well, I think there are better banks, to be very honest, to look at. and we used to have coverage on Yes Bank pretty long ago, but then because of the issues that the bank faced and the news flows, we have dropped the coverage. Currently, we don't have coverage on Yes Bank. My sense is that, don't look at a price and buy the stock. You should look at fundamentals, basically, if you're a long-term investor. And in our view, we believe, public sector banks, we discussed almost about 4 or 5 names. Private sector banks, smaller banks, if you will, we are positive on City Union Bank and IDFC First Bank. I think these are better choices. And, I think in terms of numbers also, I don't think Yes Bank has anything positive to speak about.
Right. Kunal, let me come to you then. What's your take on Yes Bank?
Well, I don't suggest, I think my view is also very similar to Gaurang. I would believe that, the stock is relatively huge underperformer, whether you look at this in a time scale of the last 3 months or over the last 1.5 to 2 years as well. The stock has been consistently disappointing. I remember, I think 30 plus was the high for the stock in 2023-24, and from there the stock has halved in just a matter of the last 1.5 odd year. So I believe that that's a clear-cut signal that the stock is still into a zone of huge underperformance. My view is also, I think that you should not look into venture into this name, and there are better options which are available. I've been highlighting names like HDFC Bank, Axis Bank, Kotak Bank as much more better candidates.
All right, so that's the take coming in on Yes Bank. Let me take this next query then. The next query that I have is coming in from Ekambara. He's writing to us from Hyderabad. Wants to know about GE Shipping, about 20 shares at a price of 985 rupees per share. He wants to know whether he should average at current price. Also, he wants to know what sort of stop loss should he keep for the stock, Kunal?
So I would suggest to average out, the moment the stock crosses 925 mark, because that could be a swing breakout, as well as a strong confirmation of a breakout above the 50-day moving average for GE Shipping. And post that, so I think that would probably help you reduce your cost price. Post that, I would suggest that you can keep a stop loss of 860 thereabouts for the stock, and the moment the stock closes below those levels, that could confirm a swing breakdown yet again for GE Shipping.
All right, moving on then, coming to you, Gaurang. This is Gauri who wants to know if it's a good time to make fresh investments in BSE, and the holding period for this is a period of 1 year.
Well, so we are positive on the sector, that is the Indian stock market. And we don't have standalone coverage on BSE, but if you are of the opinion that Indian stock markets are going to perform well over the next 3 years, 5 years, or maybe more, then all those entities which are associated with the Indian stock market, for example, Bombay Stock Exchange, BSE Limited, it's a platform provider. Then you have a services provider company like CDSL and CAMS. Then you have intermediaries which are doing quite well. So if your view is that Indian stock market is going to do well, definitely these companies will also perform better.
All right, so that's the take coming in on BSE. Let me take this next query coming in from Swati. Wants to know about PFC, REC and Torrent Power. Out of these three stocks, which are the 2 stocks that she can look to actually add in a portfolio, Kunal?
I would
REC,
suggest
PFC, Torrent Power.
I would suggest all 3 of the names. So PFC, REC, both of these we just discussed some time back. That's a space which I believe looks very attractive. The power space, the power financiers, they look fairly strong on the charts, and the fact that these stocks have come back towards a very attractive risk reward makes the trade a lot more lucrative at current levels. Torrent Power also, because I remember, I think in 2023-24 the stock had done exceptionally well. It was one of the stronger outperforming names. I think there was a point where even Torrent Power managed to beat the relative strength, with respect to even Tata Power in that sense. So, that indicates that the stock has been relatively very strong. Good phase where the stock has corrected back again. So, a decent risk reward to enter at current levels, provided you are a long-term investor for all of these 3 names.
All right. Moving on then, Gaurang, coming to you. Take on TCS. This is Shan Mugusundaram, who's a senior citizen who's writing from Coimbatore. So he holds 100 shares at the price of 3,800 rupees. Wants to know your view on TCS. Should he be holding this?
So we've been maintaining a positive stance as a disclosure on TCS for a pretty long time. Large cap IT company. There are some concerns in terms of US tariff that has been troubling the world markets. But we believe that the earnings have been much better for the last couple of quarters. And approximately, if I remember well, I think 4,400 or thereabout is the approximate targets on the fundamental side.
All right, so that's the take coming in. Let's continue taking your queries then. This next query that I have is coming in from Gautam. He's writing to us from Mumbai, and he wants to know between SBI as well as SBI Card, which one is the better one and has better potential for the next 12 to 18 months? Wants a combo view. Let me come to you first, Gaurang. Between SBI and SBI Card, which one do you think is a better bet?
So I think banking sector, like I mentioned in my opening remarks, Cheryl, is likely to do well, and we are positive on State Bank of India. Earnings improvement in the new financial year will throw in a lot of positivity in terms of quarter-on-quarter and year-on-year. We have coverage as a disclosure, and 920 approximately is the target from a long-term point of view on SBI.
Right. Kunal, what's your take? SBI or SBI Card? Which one looks good on the technicals?
Well, frankly, I would believe tough one to choose. But if I have to give the strength to the recent charts, then SBI Cards, of course, stands out. That's a chart which over the last few weeks has been forming a step-up formation where the support has been moving up higher and the stock is getting ready for a breakout yet again. So I would believe that there could be a potential 8 to 10% upside at least over the next 1 to 3 months, looking at the recent charts for SBI Cards.
All right, coming to you, Gaurang, this is Tanay who's writing from Vancouver, Canada. He wants to know whether this is the best time to enter the FMCG stocks like HUL, Colgate, Nestle and Dabur, all the large cap names. We've seen a fair bit of a correction, due to the FII selling coming in large caps. Now, do these FMCG large cap names look better in terms of valuation to you?
Well, we have more than half a dozen companies in the FMCG pack. HUL, ITC, Tata Consumer, Godrej Consumer, Dabur, Nestle, Britannia. And I think the initiative or the changes in the taxation that has been put in place effectively will start translating into consumption going up possibly by third quarter in the new financial year. Crude oil prices are also lower. Input cost will be also lower. Margins expansion is a possibility. So yes, I would definitely feel that it's possibly a sector that you should look at. And HUL, ITC, like I mentioned, couple of names, we have positive coverage.
All right, this one is coming in from Vivek. Kunal, he wants to know, is there any new sector on the horizon that he can look to invest in? Because he's already invested in banking, IT sector already. So he wants to know which other sector can he look at actually investing in this current market?
In fact, I was just looking at the relative strength scale for stocks and sectors which have done or started to look attractive in terms of the relative outperformance. So I think other than private banking names specifically, there are 3 themes which are emerging as potential outperforming zone. One of them, of course, is metal stocks, which we've been discussing extensively. There's another space which is the Nifty Energy Index. That's a space which started to look attractive. So again, large cap stocks which reasonably hold good potential. So something like, for example, NTPC, Coal India, etc. They start to look attractive. And the second interesting space is the infra space. The infrastructure index has also started to show signs of relative strength as well as outperformance, looking at the last 4 to 5 days of recovery. So there could be another, that could be another pocket which you can keep an eye on.
Absolutely, Kunal. In fact, metals and energy power stocks doing pretty well today in today's trading session as well. But I'll come to you, Gaurang, and actually we need both the views, the fundamental and the technical views for this. So Jay Kumar is writing in, he says that I'm holding 4,000 shares of IDFC First Bank at an average price of 49.7 rupees per share. He wants to know about the short-term view as well as the long-term view. Gaurang first, and then we'll come to Kunal.
So we have coverage on IDFC First Bank as I disclosed earlier. 70 rupees is the approximate target from a long-term point of view. There were issues with the third and second quarter earnings as far as IDFC First Bank is concerned, and it's largely known in the public domain as well because of the MFI exposure. But the management has guided towards improving that in the fourth quarter, and possibly in the new financial year, the numbers should look more attractive. If you're invested from a long-term point of view, I would definitely recommend a hold.
All right, so that's the take coming on IDFC First Bank. By paucity of time, Kunal can't get your view on IDFC First. Can you give it in one word answer or like a quick one for our viewers by any chance on IDFC First?
I'll recommend a hold as well as a buy.
Or hold as well as a buy. Okay, those The two words and two powerful words coming in for IDFC First Bank. But on that note, thank you so much, Gaurang as well as Kunal, for joining us on the show, taking all the viewer queries, resolving all of them, as many as we could in this short amount of time. But on that note, it's a goodbye from Ankita, myself, and the team that put the show together.